We now need to remember to include our description of why this is reconciling items. When you look at your tax rate reconciliation, I have explained all of these during the calculations as we have worked through the information. Therefore, I'm only briefly going to work through this with you. Now, note number 1, depreciation in terms of our admin building. You will remember they've indicated to us that such does not allow any tax allowances on our admin building. Therefore, we had to add this back. Note number 2, when you look at profit on the sale of land, remember we have 100% included in our accounting profit. But for tax purposes, we may only include 80%. Now, this is what you need to explain, guys. You need to explain 100% included for accounting purposes. Remember, no abbreviations. However, for tax purposes, we may only include 80%. Therefore, we had to take out 20%, and therefore this 20% is our reconciling item. Number 3, donations. This is an expense allowed for accounting purposes, therefore included for accounting purposes, but not for tax purposes. Again, no abbreviations. Number 4, dividends received. This is income included for accounting purposes, but not for tax purposes. Therefore, a reconciling item. Number 5, and this is important, recognition of deferred tax asset on our assessed loss. In terms of note number 5, I've included the description as per your solution. You can read through this. I'm briefly going to explain this to you. Remember, we did work through our important paragraphs 34, 37, 56, and I have explained the principle of those paragraphs to you. Now, what happened here is that in 2017, we had an assessed loss, but we've only recognized 50% due to the fact that we have identified that there's not sufficient future economic benefits to be able to utilize the loss. Now, in 2018, we are able to identify that there is sufficient future economic benefits. Therefore, we may now recognize the remaining 50%. Now, I just quickly want to read through the last sentence with you. The recognition of the unrecognized deferred tax asset in the current year will decrease the tax expense above the movement in temporary differences and will therefore be a reconciling item. Now, the recognition of a deferred tax asset, we will debit the deferred tax asset and credit our deferred tax in our profit or loss. Therefore, they indicate to us the recognition of the unrecognized deferred tax asset will decrease the tax expense. If you look at our journal, decrease, we credit our deferred tax in our profit or loss, and the expense account decrease on the credit side, increase on the debit side. Very similar reason for the recognition of our deferred tax in the prior year, and we can indicate that this is going to be note 6, and let's include the details in terms of note 6. Note 6, again, I've included the details as per your solution. I'm not going to work through this. Very similar reason as per note 5. Note number 7, the effect of the different tax rates. Now, I have explained this to you. Let's just quickly read through the sentence. Income tax expense in the statement of profit or loss includes tax on foreign profits taxed at a rate of 15% and not at 28%. And therefore, this is a reconciling item. Guys, ensure that you are able to explain your reconciling items. If you don't understand them, go back to basics. Look at journal entries. Ensure that you understand the difference between your accounting rules and your tax rules.